Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, and my two co-hosts, Mark Hanf and Nam Phan of Pacific Private Money, are off today. So this is going to be a solo show. I've never done this one before. Our phone number is 888-912-1190. Now you're going to use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And that certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And at the third trivia question is going to be a special one where we're going to give a $25 restaurant.com coupon out that can be used at hundreds of restaurants. And we used to be on KDOW at 1 p.m. On 1120 on the dial, and now we are on KTRB 860 The Answer at 8 p.m. So welcome all you new listeners. And ordinarily our situation is a bunch of guys sitting around a bar having drinks without the drinks, talking business and real estate, and you, the audience, are listening in. And now it's not a bunch of guys sitting around, it's just me, Edward Brown. Today's trivia theme is songs of the 1980s. And we don't have a special guest today. But what we're going to do is we're going to spend time discussing Pacific Private Money and the different funds they have. They have 4 different funds. I'm going to explain what they do as a company and how the rate of return that they are paying is averaging, well, actually the minimum is 7%, and it pays as high as 12% in the different funds they have. And you're going to be quite amazed as to how they can pay that kind of rate of return, and yet most people would look at this and say, gosh, this really is not a risky investment. And you'll understand why when we get into the various aspects of it. And by the way, all the funds have no fee to get in, no fee to get out. That means they are no load. All of their funds have a 1-year lockup period, except for one, which can be treated very similar to a money market fund in that there is no lockup period. So everyone's going to be very interested in hearing about that. So first of all, Pacific Private Money, what are they? They are an alternative lending company. Imagine them exactly like a bank, but also imagine them like a mutual fund. So from one standpoint, they are similar to a bank in that they make real estate loans secured by real estate, just as your local bank would. So the first question people ask is, well, then how can they pay such a high rate of return if interest rates are so low? I mean, I can go to my local bank and get a real estate loan in the 3% range. So how can they pay over 7%? Well, the main reason is the reason that they're in existence, and that is usually it has to do with speed. So if you walked into your local bank and you said, hello, Mr. Local Banker, I want to buy the house right next door to me, and it's worth $1 million. But because I know the guy and he needs money, he's willing to sell it to me for $800,000. And I've got $300,000 cash. I need a $500,000 first mortgage. And the bank will say, well, that sounds like a fantastic deal, and you've got a 750 FICO score, so yes, I mean, of course we'll lend you this money. And the client says, well, okay, but there's one catch. I'm getting such a good deal on this property because I've got to close this deal in 14 days. Well, the bank is probably going to say something along the lines of, well, unfortunately, we can't work that fast. It's going to take a while to get an appraisal. You have to go through all the underwriting. We're going to look through your checkbook, and you're going to have to explain, you know, that $420 deposit, where did that come from? And they're going to take probably, you know, at least 30 days to close the deal. And the client's going to say, well, I don't have that much time. I got to close this deal now. And the bank will say, well, unfortunately, you're going to have to find another lender. And at that point, the client will say, well, gosh, I've got to go to a mortgage broker or some other lender. And mortgage brokers will usually find us. And sometimes the bank will tell them, go see Pacific Private Money. They can lend you money very, very quickly on real estate. And what we'll do at Pacific Private Money is we will lend you the money, but a higher interest rate. And we'll charge probably a couple of points on that. So the situation is that you'll get your deal done, but it'll cost you a little more. But if you think about it, if you're buying a $1 million house for $800,000 and you can refinance the Pacific Private Money loan out at any time without a prepayment penalty, it's worth paying $10,000, $20,000 because you're going to actually make a couple $100,000 on that property that you just bought, which was $1 million property, for $800,000. So you'd go to Pacific Private Money, you get the loan from them, and then you'd immediately start working on the refinance with the big bank or the local bank, who will take 30 days, 45 days, whatever, to go ahead and make you the new loan. But if you're paying, let's say 9% interest and a couple of points to Pacific Private Money, it's going to cost you. But again, you're going to get your deal done. And from Pacific Private Money's standpoint, they charged you 9% and a couple of points, so they can easily pay the clients who are investing with them, who make these loans, a 7+% rate of return, even after expenses. So we're going to get into more of that. We're going to talk about other kinds of loans, real estate situations that happen. Sometimes it's speed, sometimes it's just could be a glitch in the credit report. There's a number of factors. Could be self-employed individual. And then we're going to show you how you can join the Pacific Private Money investment team effectively, and how it works very similar to a mutual fund. It's not actually a mutual fund, but it acts like one. And I'm Edward Brown, your host, again, doing a mono show today. We are going to go to our first commercial break. Trivia question theme is songs of the 1980s. So here's our first commercial break trivia question. Some bands have the same signature song. One of the biggest songs of the 1970s became one of the biggest songs of the 1980s, after which band covered the Aerosmith song Walk This Way. What was the name of the band that did it in the 1980s? So again, the band that did it in the 1970s was Aerosmith with the song Walk This Way. Who remade it in 1980? What was the name of that group? The first caller with the correct answer is going to win the tanning certificate, which is worth over $100. Call 888-912-1190 to answer that trivia question. In the 1980s, which band remade the Aerosmith Walk This Way song? Don't touch that dial. The Best of Investing will be right back. Welcome back to the Best of Investing. Edward Brown here doing a solo show because both Mark Hanf and Nam Phan are off today. Our first trivia question was, some bands, we're talking about, what's the theme? Songs of the 1980s, that's the theme. Some bands have the same signature song. One of the biggest songs of the 1970s became one of the biggest songs of the 1980s, after which band covered the Aerosmith song Walk This Way. So which band did it in the 1980s after we know Aerosmith did it in the 1970s? The answer is Run DMC. All right, the first caller with the correct answer won the tanning certificate. We'll announce that. Actually, we'll just send an email to whoever won that. Okay, so going back to Pacific Private Money and what they do and how they can pay such a high rate of return, we were talking about them being an alternative real estate lender. So they only deal on real estate. They only lend on real estate. They don't do equipment leasing or anything like that. So they're very similar to a bank, but they can work very, very quickly. Why? Because they don't have 11 levels of approval. There's not all the red tape. Yes, they follow the rules. Yes, they are regulated, but there is not so much bureaucracy and red tape to have to fight through. They're intelligent people who can think outside the box and use common sense. So we talked about a situation where someone needed money for speed in order to buy the property next door to them and get a fantastic discount, and Pacific Private Money is able to lend due to speed. Other situations happen where, let's say someone's been self-employed and they've only been working, let's say, for a few years, but they worked for another company and they broke off on their own, let's say a construction worker, and he's had his own business for 18 months. In many circumstances, the banks will tell that borrower, yes, you've got a great FICO score, 780, but you've only been self-employed for 18 months. Wait till you've been working for 2 years on your own and then come back to us, and then we'll be glad to make you a loan. Well, most people don't have 6 months when they want to make an offer on a property. In fact, I'll give you an example of something that happened earlier this year, where the couple was moving from one part of Marin County to another part of Marin County. The couple made well over $1 million per year. They only had about $300,000 or $400,000 in the bank. They wanted to buy a $2 million property, and they needed to act very quickly. They wanted to put in an all-cash offer. And technically, using Pacific Private Money's funds is not technically an all-cash offer, but it sure seems like it is when you can close the deal in 11 days. So they decided to make a very aggressive offer, even though they knew that there was going to be backup offers on the property. And at the time, we looked at the deal and we said, boy, you know, we'd love to make this loan. They needed $2 million to buy the new property. And they were going to what we call cross-collateralize. So Pacific Private Money was going to give them a first deed of trust, first mortgage on the new property, and also cover themselves by being a second mortgage on the current house. So Pacific Private Money felt very comfortable with that loan. They knew that eventually the couple would sell the first house and pay down the loan that they gave them, and then refinance out with a regular bank. In this instance, the borrowers made a very aggressive offer under what the asking price was. And in a market where things were going crazy, this is just before COVID hit, and offers were coming in all over the place, we were actually very surprised that these borrowers were able to get into contract, because the sellers looked at it and said, wow, you're going to put up a $25,000 non-refundable deposit, and you said you're going to close in 11 days? Yeah, okay, well, we'll accept your offer, even though it's $75,000 lower than the next price, because the next price house, the offer that came in was 75,000 higher, but they were going to take about 45 days to close. So they said no contingencies, and they actually saved, if you think about it, the borrower saved $75,000 by using Pacific Private Money. So they actually, in this case, saved money, even though they're being charged a couple of points and a higher interest rate. It did not cost that much. It didn't cost that much compared to saving $75,000. So sure enough, they went ahead, sold the first house, paid down the loan, and the borrower was able to refinance with a regular bank. Now that the property was, the loan instead of $2 million was paid down to about $400,000. Very easy for them to refinance out with a regular bank. Now, from the investor's side, imagine a mutual fund where you invest in a mutual fund that is no load going in or out, but there's a 1-year hold. So all of your money goes to work for you. And when you go into a mutual fund that buys stocks, you're basically diversified within that mutual fund in the various stocks that they buy. In Pacific Private Money's standpoint, you're in that investment, if you invest in their fund, it's diversified amongst 100 different loans. So it's very, very similar. And the monthly interest that they pay on an annualized basis on the Pacific Private Money Fund is about 7.5%. It usually ranges anywhere from about 7.25% to 8%. The reason is because loans will have different varying interest rates on them. March has 31 days, typically 28 days for February, calculated on a daily basis. They do pay a monthly distribution. Again, there's no fee to get in, there's no fee to get out. And by the way, if you ever want this information explained to you further, or you want to receive information, Pacific Private Money can be reached at 415-883-2150, or you can go to their website, pacificprivatemoney.com. The email to use would be investor.relations@pacificprivatemoney.com. So imagine, the average loan to value for the Pacific Private Money Fund is only about 60%. So $1 million house, typical, $600,000 is the loan that Pacific Private Money makes. The term is usually anywhere from 11 months to 3 years, a very short term. Main reason being, who would want to pay them a 9% interest when they can go get money from the bank at 4% or 3% interest? Nobody. So Pacific Private Money makes very, very short-term loans. And the proof is in the pudding from the standpoint of how risky it is, because it's very rare that there's a foreclosure. These borrowers do not want to lose those houses, not when they have that much equity. And in fact, since Pacific Private Money's been in existence, they've done over $800 million in loans spread across almost 2,000 of them. Zero losses. I repeat, zero losses. We're going to talk more when we come back. Again, how you can invest, and we'll talk about the different funds that they have, because that's just one of the funds. All right, the second trivia question we have for the 1980s is the video Hungry Like the Wolf won the first ever Grammy Award for Best Short Form Music Video. Who sang Hungry Like the Wolf? All right, call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate. And stay with us. You are listening to The Best of Investing with your host, me, Edward Brown. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host. Mark Hanf and Nam Phan of Pacific Private Money are off today. Second trivia question. The video Hungry Like the Wolf won the first ever Grammy Award for Best Short Form Music Video. Who sang Hungry Like the Wolf? And the answer is Duran Duran. All right, we've been talking about the Pacific Private Money Fund, and you know how you can earn minimum interest rate that they pay is the preferred 7%, and then you get to split the profits with the manager, and there's always been profits. So the range of the rate of return is averaged between 7.25% to 8%, a little higher than 8%. The fund has been around since 2013. The company's been around since 2008. Many thousands of, I'd say almost 2,000 loans, zero losses, because the underwriting is very conservative. In fact, they say no 9 out of 10 times. So it's not like everyone who wants to get a loan gets one. They're very, very choosy as to who gets a loan. And if you're interested in more information, you can call Pacific Private Money at 415-883-2150, or check out their website, pacificprivatemoney.com, or email them investor.relations@pacificprivatemoney.com. Now, we've been talking about how the interest rate is, well over what most other funds are paying, or not only funds, but other conservative real estate investments, or even any investments, conservative for that matter. But there's a catch. There's always got to be a catch, all right? Here's the catch. You have to be an accredited investor. And what that means is that you have to have a net worth exclusive of your home of at least $1 million, or you have to be making $200,000 a year if you're single, or $300,000 a year if you're married. So if any one of those apply, then you can qualify. Otherwise, they do have a separate website called privatemoneyloans.com, where you can invest in individual mortgages and earn still close to 7% rate of return. And but you're not going to be diversified in a fund. It would be specifically these one-off type deals, and that you can register for free, privatemoneyloans.com, and see what they have available. So that's the Pacific Private Money Fund. Now let's move on. One of the most exciting funds, and I like it the most because I'm actually one of the managers, is the Pacific Southwest Note Fund. Now that fund, unlike the Pacific Private Money Fund, which invests primarily in California, the Pacific Southwest Note Fund invests in Texas. They can go in other states, but right now they're concentrating in Texas. Now, they're not making loans. What they're doing is they are buying seller carryback mortgages. So this would be a situation where Mr. Jones owns a house, sells to Mrs. White, and Mrs. White, instead of her going to the bank for a loan, she gets Mr. Jones to carry back the first mortgage on the house. And so he's acting as the lender. So take typical example. House is worth $100,000. Mrs. White comes in with $25,000 down, and the $75,000 is owed to Mr. Jones. He basically acts as the bank, carries a first mortgage. Let's say it's a 15-year fully amortized loan, so that every payment she makes, some is principal, some is interest, and after 15 years, she's paid off the mortgage. And Mr. Jones is what they call the seller carryback person. So he's carrying a $75,000 mortgage that he's earning interest on, and let's say he's charging 6% interest. Every month he gets a check from Mrs. White. Some is interest, some is principal. So his the loan balance is constantly going down. Now he's got to hold that note for 15 years in order to get fully paid off. But let's say 6 years into 6 years later, let's call it, the mortgage balance isn't 75,000 anymore. Maybe it's 60,000, and he needs money because he wants to buy a piece of property, buy a car, has health problems, whatever the reason. Where is Mr. Jones going to get money? Well, he can't just go to the bank and say, Mr. Banker, I've got this note that now is down to a $60,000 balance. Would you buy it from me? The bank, of course, does not do that. Well, is he going to put it in a Craigslist? I mean, how's he going to sell this note? So what we do is we solicit sellers for these kinds of notes, asking them if they're interested in selling at a discount. And then we negotiate with them a price. And then once we negotiate the price, we, Pacific Southwest Note Fund, now become the bank, and Mrs. White now makes mortgage payments to us. If it's 6 years old, she's got 9 more years left of payments. So she'll be making payments to us. Excuse me, but because we're buying at a discount, maybe we'll buy that note for $50,000. So we're not getting a 6% interest rate. We might be getting 12% or 13%. And we are able to pay our clients a minimum preferred return of 9% with a target of 12. And so far, we've been able to pay 12.23%. So you go, why would Mr. Jones sell his note at such a discount? Well, he needs money. For whatever reason, he needs money, and there you go. So what's our risk? Well, the house is worth $100,000, and we bought the note for $50,000. So our loan to value is only 50%. Mrs. White's been paying the mortgage for 6 years, so far she's been a good payer, and she'll probably continue to be a good payer. If not, then she'll have to sell the house or refinance with a bank or foreclose. It's that simple. So far, we have done 25 loans, and we've had 0 late pays, which is interesting because even in the COVID situation, one would think that there'd be a bunch of requests for deferments, etc. Has not happened. People just go ahead and pay their mortgage. And a lot of times these mortgages are fairly small in dollar amounts, $715 a month. Well, even in Texas, it's going to be hard for them to rent a place for cheaper than that. So they go ahead and just continue paying their mortgage. Again, for more information on that, Pacific Private Money, 415-883-2150. The website is pacificprivatemoney.com. investor.relations@pacificprivatemoney is the email. So we're going to continue on. We're going to go to our third trivia question. Now this one, we're going to give away a $25 restaurant.coupon. And the third caller with the correct answer is going to win that $25 restaurant.com coupon. The signature song, Touch of Grey, was what band's only top 10 hit on the Billboard Top 100? So we're talking about the songs from the 1980s. All right, call 888-912-1190. Third caller with the correct answer is going to win that restaurant.com certificate. Stay with us. The Best of Investing is going to be right back. Welcome back to The Best of Investing. One more time, I'm Edward Brown, your host. My two co-hosts, Mark Hanf and Nam Phan, are off for today. So we're doing a solo show here. Here's our third trivia question. To win the special restaurant.com $25 coupon. The third caller with the correct answer is going to win this based on this question. The signature song Touch of Grey was what band's only top 10 hit on the Billboard Top 100? And the answer was the Grateful Dead. All right, so we've been talking about the Pacific Private Money Fund. We also touched on the Pacific Southwest Note Fund. I want to tell you also about the Pacific Freedom Fund. Now, that fund was originally set up to act like a money market account where there's no fee to get in, there's no fee to get out, and there's no hold period, unlike the other funds which have a one-year hold period. And the reason that was set up was originally Pacific Private Money had a credit line with a bank to make loans, and they would just borrow from the bank, and then they would pay off the bank. The bank one day, a couple of years ago, said, well, it's been fun, boys, but we're just not in that business anymore, so we're not going to do a credit line. Well, that kind of put the little hamper on the on Pacific Private Money because they wanted to continue to do loans that they were going to actually end up selling to Wall Street because it's not the best kept secret anymore. Wall Street is kind of coming into the business, and they like the kind of loans that Pacific Private Money funds. So what ended up happening was Pacific Private Money decided, you know what, we'll start our own warehouse line, they call it. So they set up this new fund called the Pacific Freedom Fund. Again, no fee to get in, no fee to get out. There's two catches on this one. One is you still have to be an accredited investor. Again, definition is $1 million net worth exclusive of your home, or you make $200,000 a year if you're single, $300,000 if you're married. The other requirement is the minimum investment is $250,000. Unlike the Pacific Private Money Fund or the Southwest Note Fund, the minimum on that is only $50,000. But the good thing about it is if you have $250,000 and you're looking for a place to park your money for a while, where there's no fee to get in, there's no fee to get out, and your money is not tied up, the interest rate that they're paying is just a flat 7% interest rate. And the reason they can pay that high is that they are funding loans at 9% and selling them to Wall Street at between 7 to 8% interest. So they're willing to pay 7% to the clients. And the reason that it is fairly liquid is that they are able to turn these loans over to Wall Street over approximately 2 weeks to 3 weeks. So once they get a bunch of loans together, they sell them in what they call a tranche, and they sell it to Wall Street. So they're able to have lots of liquidity. So far, there's not been any issue with people wanting to get out. All they do is just send an email, and Pacific Private Money reserves the right, I think it's 30 days to redeem their money, but it's usually been faster than that. So again, you've got the Pacific Private Money Fund, which is paying a minimum preferred return of 7%, but it's been averaging between 7.25% to 8%. It's been diversified over approximately 100 loans. That fund is about a $60 million fund. The Pacific Southwest Fund is only about a $2 million fund right now. That is paying between 9 to 12%, and actually it's been averaging at 12.23%. Then you have the Pacific Freedom Fund, which is a $10 million fund. That one is paying just a straight 7%. The last fund is one that is strictly reduced to construction loans. So all the people who unfortunately lost their house, this is in the fires in Santa Rosa, and other people who need rehab or construction loans, there's a fund called the North Star Fund. That one has a $100,000 minimum. It also has a 1-year hold. You have to be an accredited investor, but that one has a preferred return of 8% with a target of 10%. It's a fairly new fund, but so far so good. The situation that's kind of sad in Santa Rosa and other places that had the fires is sometimes you had people who were underinsured. So you had a situation where their house was worth $1 million, but maybe it was only $600,000 worth of insurance. Where are they going to get the other money? A lot of people just don't, and maybe their FICO score is too low. But if they have enough of a down payment, Pacific Private Money is willing to help them out and make them a loan, be it the Pacific North Star Fund or Pacific Private Money Fund. So they're not as interested in the FICO score, although the average FICO score is 700. They're more interested in how much equity does someone come to the table with. And in some cases, it could be just straight cash. In other cases, it could be what they call cross-collateralization. Here's another typical situation that the Pacific Private Money Fund had made a loan a couple of years ago. You had an elderly couple. House was worth $2 million, living on Social Security. They decided to move from a 2-story house to a 1-story house. So they found a house literally down the street that they just loved, got to stay in the neighborhood. They were able to only move once because Pacific Private Money actually lent them the entire $1.2 million on the new property, and they cross-collateralized with a first mortgage on the $2 million house as well as the $1.2 million house. So from Pacific Private Money's standpoint, it was a very, very conservative loan. The reason that these people could not get a bank loan is, one, they needed to act quickly in order to get the house that they wanted. They didn't want to move twice. And the bank looked at their financials and said, well, you know, you live off Social Security, that's not going to be enough. We need to see real income. Well, they didn't have it. So what were they going to do? So Pacific Private Money lent them the money. They went ahead, staged the old house, fixed it up a little bit, got top dollar, and then they paid Pacific Private Money off in full. So again, those are the kinds of reasons why Pacific Private Money does not face what usually a regular bank would face with regard to the loan defaults. If you think about it, personally, I would much rather lend to somebody who has a larger down payment, i.e. my loan to value is a lot lower than a bank. In other words, a bank typically will lend 80% loan to value as long as you've got a really good FICO score. Personally, I'd like to do the opposite. I would much rather lend to somebody who's going to put down 40% where I could lend them the 60% and has a FICO score of 600. Because people who have FICO scores of 700 and 800 don't always keep that high score. Things happen, health reason, a divorce, a loss of job, whatever the reason, situations happen where people just can't afford to make their payments and their FICO score goes down. But if you have a situation where someone has put down 40% and is only borrowing 60%, the odds of them walking away from that are very low. And if they do, then you as the lender can actually make more money. You don't try to put them in harm's way. You try to always help them out. But usually what will happen is that borrower will quickly sell the property or find another lender to cash them out. So it's very, very rare that Pacific Private Money has even had to face a foreclosure. And on the rare occasions when they have, they've actually made more money because the property that they took back was worth much more than the loan that they had. Again, for more information, call Pacific Private Money at 415-883-2150. Go to the website, pacificprivatemoney.com. Quickly send an email to investor.relations@pacificprivatemoney.com. And all your questions will get answered. Stay with us. The Best of Investing will be back with some closing comments. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host. Next week, both, I believe, Mark Homp and Nam Pham will be back with us from Pacific Private Money, and then we'll talk about all kinds of other stuff going on in real estate and the financial markets, economy, etc. But today, we're just focusing on the various Pacific Private Money funds that are being offered, because the minimum is 7% and the high is right now over 12%, all secured with real estate. So it doesn't get any more conservative than that. You know, some people, they just love the stock market. We can probably make a lot more in the stock market, but you know what? I like real estate. And, you know, companies come and go, the market goes up and down. Real estate, for the most part, stayed, you know, fairly steady. Interestingly enough, even during these COVID times, Pacific Private Money actually had their best quarter. They'll probably do about $200 million $200 million a year in loans, and it's amazing because if you wonder, you go, well, who would borrow money from them at such a high interest rate? And you're getting situations where people need money quickly, or they've had a glitch in their credit. One time there was a situation where someone was all set ready to get a loan from a bank, and up popped an IRS lien. and it was wrong. But tell that to the bank. How long does it take to get rid of an incorrect IRS lien? About 6 months, right? Well, they needed to get their transaction done quickly. They went to Pacific Private Money. Pacific Private Money lent them the money. 6 months later, they got the IRS lien that was incorrect off their credit report, and they were able to refinance with a regular bank and be happy. So for more information, again, it's Pacific Private Money. They're located in Novato. They have an office in San Rafael, and they're also some satellite offices in Southern California. You can reach them at 415-883-2150. Go to their website, pacificprivatemoney.com. You'll get all kinds of great information. You know, the deals, where do they come from? They come from realtors. They come from mortgage brokers. They come from bankers. One of the interesting things is that Pacific Private Money is one of the few licensed lenders in California to lend money on owner-occupied consumer loans, because they still follow the Dodd-Frank rules. And why is that? Because the entry barrier is quite high. In order to get into this space, it costs at least $80,000 to $90,000 for the licensing, the software, the legal, the continuing education. Well, a lot of other private lenders out there say, you know what, I don't want to spend that money, and I've got enough business doing fix and flip loans. You know, forget it. We'll leave someone else to do that. So that's where Pacific Private Money really shines. If you're a realtor, you can go to investor.relations.com. That's the email, and either let us know what you are interested in from an investment standpoint, or whether you want to borrow money, or whether you want to refer your client if you are a realtor. We help realtors make 2 commissions, because they end up making the sale of the house and the purchase of the new one, versus a situation where your client says, I want to buy that house, but I haven't sold my house yet. Well, they end up losing out on both. So again, check out pacificprivatemoney.com, or the email is investor.relations@pacificprivatemoney.com. So we are going to go to our thoughts of the day. This hour went very, very quickly. Again, next week, Mark Hanf and Nam Phan will be back joining me, and we'll talk about all kinds of other stuff. So here we go. Thoughts for the day. It's very easy to defeat someone, but it's very hard to sin someone. I'm not sure what that means. Okay. And if you look at what you have in life, you will always have more. If you look at what you don't have in life, you'll never have enough. And with those thoughts, we want to say, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.